Good evening, traders. Welcome to your 7-minute market update utilizing technical analysis to predict direction based on human emotion. Today is July 12th, 2012. Lots to talk about, so let's get started. This is a chart of the SPY, which is the ETF that tracks the S&P 500. All right, let's take a quick look at what happened today. Let me load my drawings in here. And basically what we've discussed in the previous videos is we've had this upper trend line up here. We had this lower trend line down here. And I basically said that if we close anywhere underneath this 135.70 level, I'm sorry, 133.70, or a close below, definitely below this bottom trend line here, we have a possibility of bleeding out very quickly. So if you take a look at what actually happened today, it was pretty interesting, and I did say that volatility would pick up, and it's definitely picking up. Volume today was only 143, which is a little bit below average. I like to consider average at 150 million trades, and like anything, when you have a low volume, you have an upside bias simply because the institutions have a chance or a probability to prop the markets higher because there's not enough sellers. All right, so essentially what happened was we I'll show you the 10-minute chart in a little bit, but okay, so let's talk about the daily chart here. So basically we came down, we actually broke through this bottom trend line over here, and that made everybody bearish at that point, so everybody started shorting the market, but because of the low volume, we had a buy-in towards the end of the day, middle to the end of the day, and then all the shorts got stopped out. And what they basically essentially done was they've closed the candle right above this trend line here. As you can see, it's just right above it. Now these two mathematically calculated levels obviously held for just one day, and I did mention in previous videos that I was expecting probably a consolidation pattern of some sort before dropping lower. I did, however, also mention that although it's rare, or I wouldn't say it's rare, I would say not as common as a 3-day consolidation period, we do have such things as single-day consolidation periods, such as this single day up here, where we had this huge down move. We got this 25% retracement, just like I said on this day here, which was yesterday, which is what we got yesterday from the day before, and then we started heading down shortly thereafter. So that's essentially what happened today, except the fact of the matter is, if anybody saw a close below this bottom trend line here, then you would have had a lot of shorts coming in, and the bears would have just came in and started ripping the market to shreds, and it would have been just a bleed out. Okay, so that's outright what I'm thinking about here. Now, if we look at the volume at 143 million, let me just get this thing up here. The volume wasn't even that low. I mean, that high, I should say. It was pretty much the same volume as yesterday, maybe a little bit more, but this is telling me that we could possibly have more downside to come. However, I mean, so what do I mean by this? Well, we have this doji candle, which a lot of people think is a reversal, right? So we have this down move, and then now we have this doji candle. Okay, so we wouldn't even consider this as a consolidation period. Let's just say we just came straight down, because essentially that's what you could look at it as, a straight down pattern. Now we created this doji candle, which more than likely is a reversal pattern, but we had a doji here, a doji here, and a doji here, and all these doji candles, there's a lot of traders out there that just trade based off of candle patterns that went long and is getting burnt, and got burnt every day after they went long on each doji candle. Now, just because it's a doji candle, like I've mentioned before, I need to see substantial volume on any type of doji candle or reversal pattern on the candle charts. Okay, so if I get somewhat of if this doji candle happened with this volume, then yeah, I would definitely think that a reversal is in play. Okay, or a reversal is should pop higher off of this bottom trend line. But because we didn't get that type of volume, then there's a possibility that we could bleed out tomorrow. Currently, the ES mini futures is up at 4.25 points. So that gives a little bit of a bullish sentiment. But the real data will come out tonight when the European markets open. So just keep in mind that right now I am neutral for tomorrow, and I'll tell you why. First thing is, we did not close below this bottom trend line here. At the very last 10 minutes of the day, we actually bled out, but it didn't bleed out enough for us to close on the bottom here. And then in addition to that, because we broke down, we are now under the 50 moving average and the 20 moving average, and we are under these two levels here. That gives a bearish sentiment as well. Okay, so now the bullish sentiment is they were able to still close it above this bottom trend line here. Okay, so they were not able to close it below, so that's bullish, and it did create a doji candle. Of course, it wasn't on volume, but it's still bullish in some sense that we could get a small bounce tomorrow, and we are definitely, if I'm not mistaken, in somewhat of an oversold condition. So it's, we may get a small pop tomorrow, but again, because of this low volume here, I'm thinking that we still have more downside. So what do I think may happen? We may actually come down. We may start consolidating under this 33.70 level and then come down even further. Now keep in mind again, and I need to mention this over and over again, next week is the week of options expiration, so we're going to get a lot of whipsawing. Okay, so institutions are going to whip people up to stop out the shorts, and whip people and whip it down to stop out the long plays. Okay, and that's the institutional game playing, simply because when options expire on Friday next week, the institutions are the ones who write these options. They're the ones that write these contracts. You're the ones, like you and me, we're the ones that are buying the contracts. So if we're short or long the market, they want to stop us out so they can make the most money as possible, because they know that executions of contracts would not be possible if they're able to stop us out. I mean, it's as simple as that. Okay, so basically, in essence, what a lot of people do is they hold on to their options until it expires, and it expires worthless. Okay. However, now, I'm not a gambling man. Actually, I am, but if you play the stock market, obviously you're gambling. But what I like to do is put the odds in my favor. Right now, although I'm going to be neutral for tomorrow, I'm going to be more bearish than bullish, and I'll tell you why. Even though they saved this from breaking down from this bottom trend line here, what it did do is, let me just delete all the drawings here, and then let's just take a look at what it's doing. Okay, this does look like a reversal candle. We are not near this resistance point here yet, or I'm sorry, these support levels here yet. So in between here would have some pretty good support. The reason why we got a bounce today is probably because we are at a gap fill. Okay, so as soon as they hit this gap fill, we got a small little pop, but that doesn't mean we're going to start heading higher. This doji candle does indicate a possible reversal, because doji stands for meet in one place and or an indecision in the stock market, which normally means a reversal. But again, we did not do it on good volume, so I cannot guarantee, or I would not place a long trade based on this pattern here. Okay, so why am I more bearish than I am bullish? Because we are closed below the 50 moving average, we're closed below the 20 moving average, we're closed below this trend line that comes down here. So let me just draw this in for you. We had this trend line here all the way down here. We closed below this trend line here, which tells me that it's showing a lot of weakness. Now the only thing that I see in favor for this is that we were able to recover on this upper trend line here. So let me delete this one and zoom in. We did close right above this trend line here, and indicating that there is a possible chance that we get a bounce, but it's more bullish, meaning the markets look a lot more weak than it does look strong. Okay, so it looks weaker than it does look stronger. Now a lot of times when you draw trend lines, everybody's going to have a different type of trend line, simply because it's open to interpretation. I mean, the general gist of drawing a trend line is pivot point to pivot point, but it really depends on how you draw these pivot points, or how you connect the pivot points. Some people like to connect the tails, some people like to connect the bodies, some people say it's okay to cross bodies, some people say it's okay to cross tails, blah blah blah, this and that. What I like to do is I like to do the most conservative, and right now this is the most conservative, and the most conservative trend line says that we still closed above the trend line. Now, being not as conservative, we can actually, this would theoretically still constitute a trend line, because we have this pivot point here. We can take the bottom of the tail here, and as long as we don't cut through the bodies, this is still considered a nice trend line. As of yesterday, we still closed above it, and then today we are definitely now under this trend line, which means if this trend line is true, I would not expect a bounce until we hit around this 200 moving average before we come up at least 50% to retest this bottom trend line or upper trend line up here. Okay, so the expectation, if this trend line is true, now again, it's like a chess player. It's if then, if else then, or what, right? So if we come down and we break through and we touch this 200 moving average on this pivot point here, then I do expect a 50% retracement between this level here and the upper trend line, which is about here, before coming down here. So I would not actually wait till we tag this upper trend line. I would actually take another short by the time we get over here, which should be approximately around where the 50 moving average should line up with. Okay, so now let's take the other scenario, just like a chess player. Let me load the drawings in here. Okay, let's just say we do bounce tomorrow, we are gonna have some minor intraday resistance here on this 20 moving average. Okay, we are in oversold conditions, so there's definitely a possibility that we could have a small bounce. Do I think the bounce is going to be long lived? Definitely not. Again, we are more bearish than we are bullish, so I do not think that if we do get a bounce, it's going to be a very strong bounce. But the problem is, the caveat is, and I really wish the timing was right, but right now the timing isn't right. And it's funny when I said I like a plan when the plan comes together yesterday, and today the plan isn't really coming together anymore because next week is the caveat. Next week is the week of options expiration, which means there's going to be a lot of volatility. There's going to be a lot of game playing. The institutions may prop this market higher to trick you and do a head fake and get you to believe that we're going to get a bounce. I mean, this is a perfect time, right? Think about it. If you're in an institution and you wanted to trick people into going long the market because there's a doji candle here, and a lot of people would probably like that. And in addition to that, we did not close below the bottom trend line, and that would get even more people bullish. Let me just delete all my drawings once more again, and let me show you what I'm talking about here. So we have this bottom trend line here, and if people draw the trend line conservatively, the today's candle actually closed above it, right? So that constitutes a possible bounce. In addition to that, this doji candle, where a lot of people who like to play candle charts and candle patterns will see this doji candle and say, oh wow, the doji candle is created on the bottom trend line. We may get a bounce, right? And just imagine these moving averages aren't even here. Now the institutions will consider this, a very good prime opportunity to prop the markets higher, especially in low volume. I mean, we only had 143 million today, and then make a nice substantial bounce, get everybody long, and then just slam the market short or down, and then stop everybody out from their long positions, and then they make a lot of money. So you just have to be very careful next week. Tomorrow is a caveat again because tomorrow's Friday, and Friday is normally known for being low volume days in general. So that's just something that you want to watch out for. Again, as a chess player, you just got to make sure what you act on what you see in the short term. Okay. Now, again, because this is conservative, if we close below this trend line and we do confirm, then then that's it for this market. This market is done. Okay, and in my opinion, this market is done. We're going to have some support here. We're going to have somewhat of a 50% retracement, and then if you miss this, say we just come straight into it here, then I would wait for a 50% retracement before reshorting the market again. Okay, so that's just my opinion. That's what I'm looking at now. I've wasted a lot of time talking about the SPY, so I'm just going to skip the dollar. Okay, maybe I won't skip the dollar. This is a chart of the UUP. I'm just going to go as fast as I can because I got some stocks I wanted to talk about. Alright, so the UUP broke through this double top and then came back in. It was unable to close below. Alright, so if we get another close above here tomorrow to confirm this breakout, then I think the UUP should be heading higher. How high? Let me show you on the DX. This is the daily chart of the DX, which is also the US dollar. I have a target here, which is 85.23. All right, so let me extend this line over here. So we had literally broken out. I did talk about yesterday in yesterday's video that this could be a consolidation period where it gives us enough juice to break through. That's actually what we did. And again, just like the UUP, we pulled back, but we were unable to close below here. So if we are able to close above this candle here tomorrow, then that would above this candle here tomorrow, then that would constitute a breakout in my opinion, and we should see the dollar go higher, and like everybody knows, dollar up, market down, and vice versa. Okay, so I'm just going to run through my current holdings or lack thereof right now. This is the chart of the Seagate Technologies. Alright, so as you guys know, I was short in Seagate at this level here, which is at the 2618. Alright, so Seagate came all the way down, and when it hit this bottom, let me zoom in here. You see this gray line here? This gray line and this bottom trend line here is when I sold it. Okay, so I sold it for a 20% profit. To me, the reason why I sold it was because it went. I have these two calculated lines, which is going to give support. I have this trend line here, which is also going to give support, and it created well, I didn't know at the time, but it looked like it was going to bounce, and sure enough it did. So it happened to be the right decision. It created this doji candle, and the volume wasn't substantially high, but it was definitely higher than yesterday. So there is a slight possibility that the STX could possibly go a little bit higher tomorrow. And that's that's just going to be a small possibility because we still have major resistance up here. Basically, this is a rising triangle here, and at some point it's going to break down. And then in the bigger picture, this is a down move here, and then we're just bearishly consolidating there. Will I? The reason why I'm talking about the STX, and I know I wasn't going to mention it anymore because I wanted to talk about new stocks, is simply because if we look at the weekly, this is the weekly chart of the STX. As you can see, we have this nice down move, this beautiful, I mean, you can see it a lot better on the weekly, this beautiful rising triangle here, or ascending triangle. And then let me just zoom in over here. As you can see, it went right into exactly into this 20 moving average and this rising trend line here. So I like it when the weekly confirms the daily, so I look at the weekly to see what direction the stock might go, and then I use the daily as an entry point. Okay, and as a day trader, I would use the daily as an indicator and the intraday as an entry point. Okay, so it's as simple as that. Eventually this guy is going to break down. All right, I'm thinking it's going to at least break down to the double bottom. At some point, this 50 moving average should move up in that area at the same time, which is about 21 bucks. So what am I saying? I'm saying this. Because the reason why I sold it today was simply because tomorrow is low volume, so I have to give an upside bias. That's just the rules that I go by Monday, Fridays, and day before and day after holidays. All right. So if we do flow it up tomorrow and or next week is options expiration again. If the institution somehow prop the Seagate up, then I'm taking another short. So I don't see Seagate going any higher. As far as breaking out of this upper trend line here. So I think Seagate has a chance of getting up to this trend line here based on the options expiration. At this point, I would take another short. And you just have to remember that the SCX does have earnings on the end of this month. So you just have to be careful about that. But after next week, I think I'm going to take a short on the STX once more. And hopefully I'll be short on the breakdown. And again, because I play with options, time is money. Okay, literally time is money. Theta will eat you alive as well as Vega. So when there's a high volatility in one day, then I normally take profits, because the next day, even though the stock goes into your direction, you may still lose money because Vega dies down and then your delta decreases. Okay, so anybody who plays options would understand what I'm talking about right now. All right. And all right, I also want to talk about Walmart. This is the weekly chart of Walmart. All right, so Walmart, again, like I always preach to you guys in all my videos, you want to go short the weak stocks and go long the strong stocks. And it's simply because if the stock is if the stock is strong, then the markets catch somewhat of a small bid, then you're gonna get a bid in the on the stronger stocks, and the stronger stocks will definitely lead the markets, just like how Walmart did today. I mean, it's a market leader simply because we had even though it was up 5 cents, the SPY was down 65 cents. I mean, what is that, right? So this is the stock in relative strength. It's above all the moving averages. It's just climbing up. It's a beast, right? I haven't stopped out of Walmart yet just because it hasn't closed above the top of where I bought it from or shorted it. Now Walmart, okay, Walmart is so I shorted it over here. It did not close above this previous candle here, like I said in the previous video. Walmart looks like it's just creating these little spinning top candle formations. The 72.22 level is holding up somewhat. I do have another level at 72.90, 72.92 around there. So I do have a level up here which seemed to be holding up a little bit better. It wasn't as accurate of a level as the 72.22, but I did want to wait till it got to this upper trend line before I took another short. Now here's the thing about Walmart. What's happening is if we start trading sideways, which is what it looks like it's doing, this could be basically a bullish consolidation. When this 20 moving average comes up and Walmart comes into the 20 moving average, this sucker is just going to bounce right up one more time. Okay, so at that point I probably would have stopped out long before that. Again, any close above this candle here is probably where my stop out is going to be, but it really depends on how weak the markets look at that time. All right, so now I'm talking about two stocks. I'm going to talk about the rest of the stocks. I'm going to go as fast as possible. This is a chart of CMG, which is the daily chart. All right, so right now basically like I said in the previous videos, and it has not happened yet, but once we get a breakdown or a close below this bottom trend line here, meaning we break through this 200 moving average, which would not be a surprise to me, because again, when you have a consolidation pattern like this, you're building, what you're doing is basically building strength to punch through the levels, right? Right now, if you just look at the 200 moving average, it'll easily punch through the 200 moving average. But if it can get through this bottom trend line here and then close below and then possibly possibly even confirm, then I don't see another, I honestly don't see another resistance point until this pivot point here possibly. But your major support is going to be all the way down here, so keep an eye on CMG. And again, you just have to make sure you time it right with the markets. Okay. This is a chart of Lululemon. Alright, so one thing I like about Lululemon is this, and it might be kind of late, so I'm going to have to reanalyze this chart tomorrow depending on what happens. But you see these two mathematically calculated levels right here that coincide with each other. So that's showing some pretty good support right there. It had a little bit of a pierce of it today, which is fine, and that's normally the case. Another thing, the secondary indicator that I have that validates this move as a possible bounce is, let me look at the weekly here. As you can see on the weekly, you'll see a bottom trend line here, just like tier 1, 2, 3. Okay, so there's a possibility that we may actually get a bounce on the weekly, at least back into this 50 moving average over here, which is about 55, about a $5 uptick. Okay, now that's if this holds. It's not a very strong chart in my opinion. I mean, but the stock is still above the 200 moving average, which does show somewhat of some strength. And we do have earnings in September, so we do have a lot of time before earnings come in. And if we do get some sort of pop tomorrow, then I'm sure that Lululemon would pop with it. Now what we also have here is this gap fill right here, which looks pretty good. Actually, it went pretty close to this gap fill, and then got a small intraday pullback. So this is something that we just want to keep an eye on. You just have to make sure that you have to be careful, because if you do go long on Lululemon, which is something I might do, say we get a small gap down tomorrow, then I may take a long trade on Lululemon. It really depends. And the reason why you have to be careful, in my opinion, is because Lululemon is in a downtrend, right? You have a high, you have a lower high, and then you have a low over here, and then a lower low, and so on and so forth. This isn't a confirmed downtrend on the daily chart. It's below all the moving averages. And again, you want to go short weak stocks and go long stocks. So what would I do? Maybe if the stock can get back up to this level where the 20 moving averages, say we get a bounce over here, then I'd be much more comfortable shorting this stock than going long. Okay, so if we do get a bounce and I miss the bounce, then I'll just wait for it to get into the 20 moving average before initiating another short on Lululemon. This is the daily chart of RAX. This is a chart that I talked about in my other previous videos as well. It has this nice doji candle. The volume is not that high. It's I want to see volume like this over here somewhat. So I don't really know if this is going to reverse or not. But something that I want to let you guys know that on this chart, if you look at the weekly, all right, you have this down move over here, and then we're basically just consolidating. If we somehow can get back into this 46.72 level over there, which is only a dollar or two away, then I'll probably initiate a short on the RAX trade. Now, if we somehow get into this 49.14 level, again, like I discussed in a previous video, then this is definitely a short. In fact, if we can get there while this 20 moving average comes down, then yeah, I'll probably be taking a short on that on the daily. Alright, switching back to the daily, this is the same chart, which is RAX. This is the 46 level, and it's 49.14 level. So, if these two guys start crossing over like this or coming close together at this 46.72, and we can get price to get in there, say we get a pop next week, then yeah, I'll probably take a short on RAX. So that's something that I want to keep an eye on. Alright, this is last but not least the chart of gold. Once gold can get into this 148 level here, I'll probably take a long trade on gold. Or I may actually wait for this bottom trend line over here. But right now, shorting gold probably is just not a good idea for me right now, in my opinion. So I do have an alert here to alert me that if gold ever bleeds out into this level here, I would at least take an intraday trade on gold. Okay, so I hope that was enough for you guys for today to watch on some stocks. I'm just letting you basically know that I'm not making any recommendations to buy and start anything. This is just simply my opinion. I'm just simply telling you guys what I have in mind and what I'm probably gonna do as far as taking the trades and or not taking the trades. Okay, so this is your 7-minute market update. God bless to you all. Thanks for watching, and I hope to see you in the next video.